which is started now. And this is the ES, the 20-minute chart. So Tom's going to say a few words on that. And if you've got questions, please type them into the box. And also, if you've got charts you want us to take a look at, put those in as well. Okay, Tom.
Yeah, hi everybody. Tom Williams here, speaking to you from Worthing. As you all know, this is a little resort town on the south coast of England, right on the what we call the English Channel. It's about 50 miles south of London, so it's fairly stormy out there. It's windy. Anyway, we're all surviving here, and as you say, we've got Rita here, we've got Tina here, Gavin's here, and Dallas. Right, and I'm here, of course. Okay, so what have we got up on the screen here? We've got a 20-minute chart of the S&P 500 futures market. Now there's whipsawing like hell here. Right, and that's about really. It started here, look, very high volume. We know that the market don't like very high volume, especially on up bars. And notice the blue bars, up bars, the red bars are down bars. There's looks like an up thrust of some sort there. Look, it's got some up thrust. It says, okay, well, we're not taking too much notice of that at the moment. But it's whipsawing, and we are at a sort of level where to the left we know that there's no supply level. So we would expect this market to sort itself out. But there's nothing obvious here that we can really point out to you to say this is going to go up or this is going to go down at the moment. It's whipsawing away. I suppose we could look at a daily chart. Can we look at a daily chart and see if there's any?
Keep going down.
Right, that's a daily chart look of the same market. It's unusual if the lows are not marked somehow with some sort of signal. But that up bar on a wide spread is a bullish sign because it's pushing up through supply to the left. Look, there's a test. We expect that, always expect this to be tested. And there's your test, and then the result of that test, look, it's gone up. And it's rounding over slightly now. It's meeting some resistance. But right now, there's no obvious position that I would want to take. I need more information. Now, if there's any questions, it would help us if you type them in, and Rita's looking at her screen there, and she can see them coming in. Any stock you want us to look at, if we can. Question coming in.
Yes, Robert has the same question that cropped up in my mind as Tom was talking. You talked about this here, Tom, as being a test, and he says it has very big volume. Is it correctly a test? Is it a correct test?
Because the volume's too high. Yeah. Well, admittedly the volume's high, but don't forget you're looking at the result of this previous bar here. You've got a huge widespread up, look, as it pushes up through this to the left, right? And there's even an arrow on there warning you. Now, admittedly, but this looks like a test. Ignore the volume for now, but whenever you see these down bars, Is that, am I on it? There. Down bar on a fairly narrow spread, look. Yeah, it's only slightly up here. Yeah, but don't forget this is a daily chart. That means that if you were looking at this in a real time, it will clearly show a test. If you look at a lower time frame, and then this is a daily chart. So on the fact is they tested that, then it closed on the high, and that's why it looks like an up bar. But that's typical. If you look down here, look, it tells you the spread is narrow, look. Spread narrow. Now, admittedly, the volume's high. The bar is up, but we've just explained why that is. Okay. So that is a test. I mean, it looks like a test. It tastes like a test. Everything about it looks like a test. Mainly because you're expecting a test anyway. After this widespread up, that's a bullish indication. If you ever see a test in these markets, you can bet your bottom dollar that's a bullish indication. Anything else, Reed?
Jonathan's telling us that, of course, that the volume in this E-signal daily chart, lags one day behind, which is what we've often said in the past. Yeah, well, let's have a look. Hang on, let's just have more questions. Correct, says Mega Trader. Yeah, so when we're talking about daily charts, Tom, I think it's best if we go over to the end of day.
Oh yeah.
Really, that was the Dow. Yeah. Yeah. Well, yeah. Look at that, and there the volume. That bar that you were talking about. There's the volume. Can you see it all right? Go down to 20. There you go. There's that chart. Yeah. There, Tom. There's the thing. But what if you can speak on that? But also some. Krista says, if you have a test with high volume, do you expect that volume to be tested later on?
Well, there's nothing guaranteed, I'm afraid, with these charts, because you're dealing with human activity. And humans are notorious being unreliable, not doing what you think they do. But if you look at these things, it looks like a test. When a test you would expect a test, then you could bet your bottom dollar is a test, if that makes sense. Right, so the market was widespread up. It hit these trend lines here, and that looks like a test. Marks up. There's a red down bar, look. Volume is low. That means it's going up. Now there's another red down bar here, look. And the volume is certainly not high. So that means this market wants to go sideways or even up to this top trend line. And this is a cash market. This is where the equity lies. This is where the value of the market lies. And this is where the future follows. Everything else follows this. This index, everything follows.
John is saying, just to let you know, there have been no Tom William recordings on Trade Guider during the previous weeks. Okay, well, I don't know why that is. We'll have to speak to Peter, who is the person who uploads them. So he's not here. He's not well today. That's why he's not here. So I'll have a word with him. Oh, Megatrade says they are there now. Okay. Louis says the pound 1 hour. Let's go to
What the daily showing is it?
Yeah, British pound 1 hour. So Louis would like you to comment upon this one, Tom.
Yes. Gavin and I was looking at this earlier on, and we could see this upthrust, this weakness coming in here. It can't get that to work, Rita. That's it. Now, when I first developed this software, I told the program it was absolutely essential that we compared the volume with the price spread. And that's why we've got this vertical cursor here that you can move around. And it makes it very, very clear to you exactly what the volume is on any particular bar. But Gavin and I, we were looking at this earlier, this pound, and sure enough, there's some weakness there, look. Supply. Now we know the market don't like this high volume on these up bars. This looks like a test or shakeout here, and the volume is high. They won't like that. That means that there's supply around. Right, this up bar here, and this certainly looks like an upthrust. Upthrust. It's been marked up, catch as many stops as possible, mislead as many traders as possible, and then sudden reversal down, close near the low, is with that weakness in right behind you is a certain sign of weakness, and you'd expect lower prices. And there are the lower prices there. The volume is very, very high. This pound is not going anywhere until that volume disappears. Certainly not up anyway. So we'll keep an eye on that for you.
Question on that one. Robert's saying, which is more important, the shakeout at 9 or the upthrust at 2?
Well, again, there's nothing like that really in chart reading. You can't say one is more important than the other, but I suppose in a way you could. But that shakeout there, look, it definitely shows supply present. It's a nasty looking shakeout. They mark it heavily down, far more dramatic than they normally would do. The volume is high relative to the rest of the volume. It's been marked up, but I would say, of course, if you're actually trading this here is the most important, because this tells you that if you're in a long position, it's not a healthy place to be. So that, in a way, is the most important part of this chart. Okay?
Okay, we're going to go over to here. This, Tom, for Eleni, is sugar. Eleni wants us to have a look at, so this is the longer picture. Oh, so it's had a fair old. This is sugar, the continuous contract. That's a few more bars. So just showing Tom what's been happening. So do you want? It is a top. Yeah. No.
Second thought, drawn from there to there and there.
Okay, so from here
the low.
To there.
Yeah, and then a high.
Yeah.
That's it.
Right, I'll put 20 for you.
That's it.
Right.
So that's sugar. Now I know for a fact they will manipulate sugar. And that here, you can see it's trending up at the moment. And that's quite likely to go up sugar at the moment. Why? Because it looks as if you've got some accumulation area here. Look, these lows, there's a signal on that of strength. Look, shakeout, which it probably is. Then you've got 1, 2, 3, 4, 5 bars before you look at test. That's a red down bar. Look how low the volume is. And look how it's a narrow spread, and look how it's closed on the high. That is a test in anybody's language. Yes. The computer agrees? Yeah. The computer agrees with us. It's a test. Read that dialog box. There's a lot of information in these dialog boxes. Oh, it's gone now. Anyway, we don't hold any secrets here. We tell you everything we know, and everything we know is usually, we either tell you or it's in these dialog boxes of what's happened here, why that went up. But that's why sugar went up. And if you're watching that, you see the strength coming in here, right? And that's a definite test. Of course, we couldn't draw the trend line until the test had gone up, and then we've drawn the trend line between that low, and that high. That was a traditional Wyckoff way of drawing trend lines, and that's what we always follow. That looks bullish, as if it's going to go up. For now, we're talking about scalping. We're talking about fairly short range, but you have to wait and see what's happening. Right, okay, so that's sugar. Any questions on that? Anything, Rita?
LNE was long. If I'm correct in what you say, you've closed out LNE. Says stepped aside, but was long 1490 to 1620. So well done to LNE. LNE certainly seems to know her stuff. Well done. Okay, so can we give a sense of gold's direction? Well, shall we go to the continuous while we're here on gold? Right, so hang on, there's a bigger picture, Tom. Yeah, hang on. Oh. Down here. The first high over there. Yeah. Right. Oh, I've gone one too far, I think. Is that right? Yeah. Oh, yeah. It's a down bar. It's a down bar, but that's the high of it. Do you see? Right.
20 bars, perhaps.
Yeah. I'll just make that. What's the direction? Is it gold?
Oh, gold. It's gold contract. I find it difficult to look at the chart without drawing trend lines on it, because trend lines to me are so useful. And traditionally, you pick the first two lows and the first high and draw them off way into the future. And the computer recognizes that drawing way to the future. That's why it picks up what do they call them when the trend lines go off? Yes, you know where the boxes appear. Sorry. Oh, trade clusters. I'm sorry, I wrote them for so long ago I've almost forgotten. Sorry about that, folks. But trend clusters are very, very interesting. And when I used to draw charts by hand, I had a long metal ruler that was dead straight, and I used to draw them way out into the future. And of course the lines are of no use to you unless the data reaches them sometime in the future. But if the data does reach those lines in the future, then it's surprising. It's worth a study looking at it. How the actual price doesn't see, it might dip its toe into those boxes that are produced, but doesn't like actually closing in there because they represent resistance. They represent these trend lines. Now, it's obviously something to do with human behavior, but this works. And it's very interesting to look at this stuff. Now, this is gold here, so we can see it's been trending up. But we do look as if we've got a little bit of resistance here. Right at the top here. Yeah, there's supply. Why do we know there's supply? Because it hit the top trend line and the volume is quite high. It's not excessively high. Right? And these down bars are not showing a lot of selling either. So that looks as if it still wants to trend up. But it won't trend up all that vigorously with this supply in the background. But it could easily go up.
Oh, sorry. Okay, back over here. This is the Euro 4-hour chart mentioned by Jonathan, who says the euro dollar seems strong. It's at the bottom of the 4-hour trend line with low volume. It seems like the price will reverse up. What do you think, Tom?
Well, we don't have trend lines drawn on this. Can we get trend lines on it? Should they show a little bit more? Well, it is trending up, I suppose. First two lows, first high. No, up here somewhere. Yeah, as long as it's a low. The first two lows, first high. It's a bit fiddly drawing trend lines, but it does work. If you practice, it gets easy. Rita's doing this for me, so I can't see very well, as you know. That's it. If it's on the high, that's fine. In 20 bars, I can see it. Right. Right. Well, what's interesting is that it seems to be trending up. Right, and this trend line here seems to be supporting it, look. There's support there, definitely. Well, when I say support, there's no selling pressure on the market. When you see these red down bars, and there's little or no volume there, right, especially at that level where previously there was some volume, look. Now there it is there, look. Right, so if you draw a line across roughly where that volume was, round about there, look. So it goes up, and then if you see it fall back down to that line, look, it's a level that's important. Not only to hit that bottom trend line, but it's at the level where there was supply. Now the supply, you can see, has disappeared. And it's that simple thing that's caused that to go up like that. So this market is trying to trend up at the moment. That's how I would analyze this. And I analyze it because there's some volume here, curved up. It's fallen back down to that level. It's the level that's important. And it's also hit that trend line. And it's vigorously responded by going up. If you see a test now or low volume down bars, this will carry on up. What was the original view, Rita? Oh, right. So we agree with the... yeah, good. Okay, very good.
So good. Carlos would like a 1-hour chart of the Canadian dollar. Oh, is that a test there? Yeah, so just put up more bars, Tom, so you can see what's been going on with the Canadian dollar. And then we've had this, so
well, that's a shakeout.
right.
Right, the end of day, is it?
That's 1 hour.
Oh, 1 hour, sorry. Okay, 1 hour the Canadian dollar. Well, that looks like a shakeout, doesn't it? Why? Because it seems to have some, although there's not much volume there, look. When you see these green arrows appearing, there must be a reason why they've appeared.
Basic test.
Yes, it's
Potential stopping volume.
yeah, so it's looking at something even if we can't see it. Professional money would see the same thing. And if they were anticipating higher prices, they mark it down, look at the start of the hour, catch stops, mislead as many people as possible, frighten the hell out of people that have got a good long position, right? Help as many people to dump as possible, then they move in on that. Rapid markup, right, to trap everybody in or out of the market as many as possible. This is what they do. Now, if we see a test of some sort, which this looks suspiciously like one here, the volume low there, it is. That looks as if it wants to go up. So I'd say that's definitely more bullish than bearish. And I would say that because you've got this shakeout here. These shakeouts make the market strong.
Okay, so if you've got any more questions or any more charts that you'd like Tom to look at, then please put them into the question box. In the meantime, I'll show you something. I did a nice trade today. I've been off this week, so I've been at home and been watching the charts, if I can get this thing up, to show something that I do. To give those who are new some kind of sense of, well, what I do, but I mean everyone has different time frames that they follow, different strategies that they have. Everyone's got different levels of confidence in their trading, and I just follow the Dow. Some people know, just follow the Dow. And something came up today which looked very nice to me, and I've got, actually there's 5 charts here, but I can get it up. Right, 20 minute. Okay, so that's the 20-minute chart. And trying to just don't look. This is where I was. This is where I was at that moment. It was, I think, about 3 o'clock or after 3 o'clock, and I'm watching the charts, and I've sat through the market open and seen this this bottom reversal. I mean, this is all really highly volatile at the market open, and it's, you know, unless you see something really obvious, it's dangerous. I tend to keep out of it. In fact, the whole thing is quite dangerous, actually, I've found. So I'm really, 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 really cautious, because you can see here, look, there is what I call the upthrust. And then we get this, which is the opposite. So this is whipsawing, this market. So to make money out of a whipsawing market, you've really got to be awake and very cautious, and a lot of people would just ignore that. So, but here's an idea of what I was doing today, and I saw that. So I immediately saw that, and I thought, okay, well that's one chart, but then I started to look at other charts, and this is the 15-minute, of course. There was a nice upthrust as well on the 15-minute. Hang on. Then 10-minute, and the 10-minute showed up as, I think this was like supply coming in, but it was quite upthrusty as well. There's a signal on there, I don't know what it was. But, you know, look at that, volume's very high. So basically the last 3 charts that I've looked at are telling me there's weakness there. but I'm still very, very cautious. That's my first signal, first sign. Okay, it's telling me there's weakness there. So what do I do next? I start to think, right, well, I'm not going to get in on that. I'm still very cautious. Some people might, but I'm not. I wouldn't. Like it starts getting down, start drilling down to the 3 minute. Here we have, this is the time, 3 minute, and then we start, this is an up thrust or a very high volume at this time. The next bar is what I would call a no demand. There's that low, very low volume, very narrow spread, up bar. More weakness. Okay. So it goes down to a 2 minute. Here we are. There's some very high volumes. It's all happening at this, but this is the time. Next bar was down to confirm that there was weakness there. The next bar was a no demand. Very low volume, up bar. Next bar confirmed it. And I think I actually missed this for some reason. But look, there was another opportunity, another lovely no demand bar. So this is telling me, okay, right now, get going. So you go short. And you can follow the market. There's another no demand there. So all the while these no demands are happening, you know that there's weakness there. And so I followed it down. And I can admit that one of my flaws is that I get out too soon. I always get out too soon. But what I do is I have a target that I go for, which is 20 points. And this is where I was, and I took my 20 points out in there. So, but the reason I do that, and of course you can be sitting there and really sort of kick yourself because the market just keeps on going. Where was that chart? There we go. The reason I do that is because look, as I said, these markets do whipsaw, especially at this time of the day. And there we got what looks like a test. So I took my profit somewhere down there. So that was just an idea about what I personally do when I'm trading. Very cautious, and I'm literally just scalping the market. So just having a look at. Okay, thanks, Eleni. Thank you. Good. I'm glad it was clear. Right. So next of all, next is Michael would like crude oil. Crude oil. We're going over to here, Tom. Oh, look. Okay, so here's just show the bigger picture. This is crude oil. Yeah. Right, from down here, oh God, to about like that. Is that about right, or do you want me to move it across to there? Okay. Right. So that's crude oil to 20. There you go.
Yes, very good, Rita, for that. Keep in mind, you see, the professional money are looking hard at these markets, very, very hard. And they've probably got access to information that you'll never see. And the result of their behavior is what you see on the chart here. And that's what Rita's looking at, and what you should be looking at. It's a reaction of the professional money. Now, the first thing I notice here, when we've drawn some trend lines, it is trending up. But see this widespread up like this? I notice over to the left there was a high. There's a high there, so that's bullish, because they're trying to push up through that high to the left. I don't know whether we can show that or not, can we?
What do you want? Hang on. Put 4 bars.
Yeah, there it is, there. Oh, no, there's too many there.
Yeah.
Is that the... It's no, that's it. So it's this high here. It looks as if they're trying to ram the market up through this top. That is bullish, 20 bars. That's it. So that's potentially indication they want to go higher. So we looked at that. And if you look at these charts here, if you look at the trending system, see the simple trending system is that once these professionals have got hold of a move, by the way, they call it a campaign. Once they've got hold of this, what they normally do, they make sure that the close is higher than the close of the previous bar. And therefore you get, naturally when you get a little bit of weakness there, that's no demand. It comes off 2 bars rather than 1 bar. But up it goes. All the time it's a blue bar, look. This is done deliberately. Allow for 1 down bar, and that's a test, look. And that volume's low, so that's bullish still, look. So they're trending up. You've got a test there showing there's no supply. There's even a signal on it, look. No supply. The computer agrees with us. Right, so that helps you in your analysis. Up, 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 up. It's pushing up through that supply to the left. That at the moment looks bullish. Okay. That's a fairly decent chart there. There's no very high volume that I can see yet up here at the top, which will allow it to stop this. A little bit there. It's only natural when it hits that top trend line.
John says, please look at crude oil in the lowest time frame possible. Tom doesn't have that data, do you? I don't think you do, Tom, do you? Crude oil in a low. I don't think he has that data. But Gavin might. He's on later on doing his closing bell. So it's not final bell. We keep jokes. The closing bell. He will. He'd have that data. The daily Canadian dollar. Right, we're staying on this on here then. Oh. We haven't got it there. Where? That one. I assume, is this the one that you wanted, Carlos? Carlos says, a few days ago there was a huge 2-bar reversal. Yeah. Yeah, what have you got to say about this, Tom? Let's put up 20.
Yes, you're quite right. There was definitely weakness in the background here, look. And there it is. Supply hitting this. Canadian dollar. Right. Well, supply's there, look. And this looks like no demand markup. I don't trust these bars. They always look weak to me. It's a red down bar, means it's down, yes, but it's got top tail to it. Now, the markets normally, that shows that the early stage of that markdown, they rammed it up, catch a few stops as much as possible, mislead as many people as possible before reversing on it. And notice how the trending system works, red, red, red. Allow for 1 down, up bar, and there it is. That would be on no demand. Yeah, I mean, I'm talking to you almost without seeing it because my eyesight's so bad sometimes. I know that blue bar would be on no demand, and sure it is. So down it goes. Now it's had a markup here. There's no reason I can see why we should have a fantastic rally up. There's probably a bit of buying here somewhere, these narrow spreads. But this is a sign of weakness. This is definitely an up thrust and a sign of weakness. What does it say, Rita? No demand. So it's an up thrust on no demand. And that's usually a sign of weakness. What is a sign of weakness? I'll be surprised if that goes up after seeing that there. I certainly wouldn't want to be long when I see that. Because don't forget that these markets are not there for your benefit. They're there to mislead you as much as possible, and it's in the interest of the big professional players. Now, when we talk about professional players, we're talking about people that will have 50,000 contracts or 40,000, right? And that, once they put that into the market on down bars, then that alters the balance of supply and demand until they've resell that at a profit.
Carlos is saying it's trying to go through the previous top, isn't it? Let's have a look. Tom, is it trying to go through that previous? Okay, so Tom's got something to say there.
I mean, Carlos, it's highly unlikely that's going to go up through any tops. Highly unlikely. Why? Because look, you've got obvious weakness back here. We looked at it, didn't we? High volume and all the rest of it. And this is an up thrust. So they may try to mark it up. They may try to mislead as many people as possible. But that market's not going to go up through these highs here to the left. And where's the cause? You have to have a cause. Now, a cause is where you see the market fall and you see stopping volume on narrow spreads. Now, admittedly, we've got some narrow spreads here, but where's the high volume? And then once you see the stopping volume, they expect that market to go sideways for a few bars at least, while they accumulate enough power to take that up. And that's all missing. It's just fallen here and then suddenly decides it's going to go up, look. Probably up on some sort of news. But that, to me, looks highly manipulated. Highly. It's highly unlikely to go any higher through a top to the left when you've got this way. And where's the cause? That's what I'm saying. At the bottom here, you should have accumulation of some sort. I can't see any. There's lack of selling, admittedly, on the low here. See these down bars on narrow spreads. There's very little pressure on the market. And when we say pressure, we mean professional money selling.
There are two questions. One is, why isn't this bar on the, well, why isn't the bar on the 10th, which I assume you mean that one? Why is that not a test? No. And the other one is on the 20th, which is this one. Is that supply or absorption? So should we start on the, is this a test one?
Well, that's it's not a test. A test is a red down bar, down, on a narrow spread, usually closing in the middle with low volume. That's an up bar anyway. So immediately cuts that out. There's nowhere near a test. That's as opposite you can get to a test as possible. That's a no demand up move, showing a weakness in the market. Very important. I don't know where you get the idea that's a test from. I mean, test is a down bar, right? And where here you say there's some sort of, no. Well, there's definitely supply there, look. That's probably why we got the up thrust. Professional money are watching this like a hawk. They're behind this move. They know far more than we do. But we hope to be able to pick up what they know in part by looking at these charts. That's supply in the market, and that's why we've got an upthrust, and that's why it's unlikely to go up. Very unlikely. Okay.
Okay, can we look at Apple? Has been a question. Apple, Tom. So here's the bigger picture. Tom's just examining. I'll show you. It's had that great big bit up here. Yeah, and then it had that.
See, Apple, it's got that huge gap down in the background, which I never like. These, there's something radically wrong there. I don't know. I don't follow the news, but it's unusual if we don't have some sort of sign of strength automatically appearing on the lows. What's that say, Rita?
Test.
Test. Now, yeah, you see, don't forget, what is the time for daily, isn't it, Rita?
Yes.
Don't forget, this is a daily chart. Now, I just told you tests are always red down bars. Well, they are. But if they test early in the day and it seems successful, by the time you get around to it, by looking at it at the end of day, it appears a nut bar. But tests are red down bars like this one here on low volume. And that's what's happened there. And that's why. Look how the trending system works. When it works so orderly, it means that the professional money in this campaign to create a move is in control. Right? When you see that up, blue bars, you allow for one down bar, up, 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 one allow for one down bar, up, and so on. And it looks as if it's hitting some sort of supply up here, or no demand. No demand. And that's a bit of a weakness. That's why it's come off 2 bars. I would say that stock isn't going to go much higher. It may have a little up move on no demand here, but I doubt whether it's going much higher. I don't like these huge gaps in these stocks. There's something radically wrong when that happens, and that will affect. But they've certainly created an up move there. It looks as if it's running out of steam here. Okay.
Okay, the Australian dollar. We'll go over to here. Tell me if you. So this is the Australian dollar, Tom. There was this great big thing here. Look. Yeah, and then it's kind of gone sideways.
Right, the Australian dollar. It doesn't strike me as being anywhere that we can see a principle at the moment. This back here, there, that doesn't look very nice, does it? That's a 2-bar shakeout. But even that was tested here, look. The low here. But that's difficult to see, I must admit. That's not an easy principle. I recommend that you do nothing unless you can clearly see a principle appear. To me, this looks like it's rounding over, and it looks like weakness coming in.
No demand.
no demand. That causes that. It's a no demand from professional money as they try to mark the market up, causes that rounding over and that mushroom shape at the top. And this also looks like an upthrust there, that red down bar. I don't like the look of that. I certainly wouldn't want to go long here. Definitely not. See, that's a test there. That red down bar there. There's no signal on it, but that looks more like a test, and the volume's low. That's why they had an attempt to go up, but it was counteracted by no demand and that rounding over. When you see that rounding over like that, a mushroom shape with these red arrows up here, that's not a healthy sign.
Right. So we're being asked to draw an up channel on the chart with more bars. Yeah. Where do you think I should start, Tom? If at all.
I'm not sure if that's genuine.
Well, Tom's saying he's not sure that here is genuine.
Doesn't look genuine, does it?
No.
I would be more inclined to draw a trend line between these two highs and lows.
Right. Right, from this one, this one. Well, it's on that one there, is that right? Yeah, it is. There.
No, I suppose you could risk. Can you draw two?
Yeah.
Another one on that.
This one and that one.
Yeah.
Yeah.
You could do that.
Oh, look, it's an arrowhead.
Now you could draw. Yeah, you could draw two sets of trend lines there, look. One showing from that shakeout. But that shakeout doesn't look right to me. Can they do that? I'm not sure if they can. But what's interesting is that when you draw those two trend lines, look, we've got an arrowhead. Look, forming. And as the markets are pushed into this, the point of this arrowhead, markets don't like that. And they will break out rapidly from one way or the other. To be quite honest, this market it's not really clear to me, to be quite honest. I mean, if I was forced to make a call, I would say, of course, that could potentially go up. It's not clear to me at all. You don't do any moves in the market unless it's clear to you, because there are so many other opportunities. If you've got a chance, listen to these setups that Gavin sends out, and it gives you a clearer picture of what these setups look like. And if you persevere with it, once you automatically get to recognize these setups, you can really call yourself a professional then, and you can you'd be surprised.
All right, so Edmund's saying, I doubt those two long bars are genuine. The futures don't show the same pattern at all. So, okay, thanks, Edmund. Carlos says, tell Tom I like the expression, they are looking at this like a hawk. Well, yes, it's funny you should say that, because Tom often says as well, it's like you're waiting for a rabbit to pop its head up out of the hole, and that's what it's like. You're looking for a VSA principle on which to enter the market, and I've found that's half the trouble that most people have, is that patience and discipline to wait for that moment. And then of course when you missed that moment, you're kicking yourself and you want to get in. But I've often found that when I've got into the market at the wrong moment, when I haven't waited for that moment, I haven't had the confidence to stay in. So yeah, Mega Trader says wait for your bus. That's it. Wait for those VSA principles that Tom tells you about. They're very powerful. Okay, well we'll do one more because we're about to run out of time for Jonathan, WLT. So I think I have to go. Where's it gone? Yeah, Tom's saying yes. It's I've lost the real time. Is it me or? Sorry, I'm just bringing real. It's gone. Anyway. Strange. So up here, WLT. What is WLT, Jonathan? Tom's asking. While we wait for that, yeah, it would be a stock. That's the longer picture. Oh, hang on. Yeah. Walter Energy, says Edmund.
Well, I can tell you now in 2 seconds that's weak. And once you learn to read these charts, you can look at the chart and within 2 or 3 seconds know what's going on, more or less. If you were seriously going to invest in one, then you would study it more. But strong stocks do not have these up thrusts. And look how many there's. 1, 2, 3, 4. 4 up thrusts. That's definitely weak. Okay, that's all I can say. Now, Gavin's just walked in. Would you like to say anything, Gavin?
Well, I'll be starting my seminar in 30 minutes, so no, come and see me.
Gavin says he's starting his...
Have you looked at Raptor Pharma yet, RPTD? Did you look at that? Did you want to put that one up for Tom? Because I did say big people look at that. Oh. It's RPTP is what it is. RPTP. I think you may have already looked at it. TP? Yeah, look at the daily chart. Because we just closed the position on this. Okay. Oh. So we were long, Tom. We bought at 13.
Yeah, that's right. Now, this is an alert Gavin sent out. And that's obviously been marked heavily up on some sort of news, look. I can't... can you put 20 bars up, do you think?
If you do the weekly chart, Rita, as well, for Tom to look at and get to the 2-bar reversal on the weekly. The weekly's probably better to analyse because it's a clearer picture, I think, on the weekly.
Gavin says the weekly chart is clearer.
Can I just show you what I saw, Tom?
Go on, you tell them.
Hi everyone, I'll be talking more about this in the closing bell at 7 o'clock, but just to show you what we saw, I mean, I was in Switzerland and we were with a fund manager. There's some very interesting things on this chart that you can clearly see some principles here. But interestingly enough, a week or 2 weeks ago, you've got a test. Now that's a test on quite high volume, but notice it closes lower than the previous bar. And then the next week, which was last week, there was really no supply at all in this particular instrument. And then as we looked at the daily chart, which we're going to just put back up here, let me just put that up next to it. Okay, and if I just go back a bit. So this is the area that caught my attention. Now, right there, you've got a reversal. And this particular reversal was in a really nice place because in the background was a shakeout. It'd been in an uptrend. But I'd also heard from a number of fund managers that they were buying this stock aggressively down there at $12. So the alert that we sent on the 10th of January was to buy this stock because the target initially was 17. And that actually was achieved actually today and yesterday. So what we see now, however, and for those of you who are subscribed to the alert service, you'll notice I've sent an alert out today, which is a no trade alert, warning you that if you are positioned long here, you've got to start watching this very carefully because we have had very high volume coming in. I believe it's news driven. It's closed in the middle. I can tell you today the stock dropped to around 16, around that level, or at least it came down a bit. So I think there is supply present now. But if it's tested next week, then this could still go higher. I've still got my targets on higher prices. But there's too much supply now, and I would expect to see potentially lower prices on this stock. You can see 4 days ago, though, as the market changed behaviour, a very clear test at the right edge of the chart there, 5 bars back. And that's almost like a spring position, and that's really the reason it's gone up. So I'll hand you back to Tom, and I'll see you all in 30 minutes for the closing bell. Here's Tom.
Right, thank you for that, Gavin. It's all very interesting. Although it may seem a bit daunting to some of you at first, keep plugging away at this, and sooner or later it'll all suddenly be clear to you. And I say that because I've had no end of people tell me that they were a bit confused at first. You see, if you're a normal sort of person, you believe what you're told. If you go view a house that you want to buy, you believe the literature with it. You believe the agent. He's saying, well, it's this, that, and that, and you believe him. But the trouble with the stock market, you can't believe them. And they're there to mislead you as much as possible. And certainly they're not there for your benefit. So you've got to get your head around that. And the only way you can beat them at that is to look at the chart and learn what's really going on, rather than what you're beat, or the gut feeling that you develop about these things. So I'll say, well, thank you very, very much. It's been a joy talking to you, and I'll be talking to you again.
Okay, thank you, Tom, and that's it for tonight, and we'll be back same time, same place next Friday, and we're going to be doing the newsletter at some point this weekend, hopefully tomorrow, later on. So, yeah, we'll see you then. Have a great weekend and an even better week, and we'll see you again next week. Bye-bye.